we believe that there's a tremendous amount of capital that wants to move into DeFi. And
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to be going over some panel discussions from industry-leading experts from some of the world's largest organizations and financial institutions. I'm going to be showing you all how we are entering into an era of money movement and earning yield 24/7, 365, and traditional finance knows this. They are starting to adopt these DeFi solutions, which is yet another reason why you all should educate yourself on DeFi, passive income, yield generation with your digital assets as we transition into this era of people starting to awaken and realize that traditional finance kind of sucks in terms of earning yield on maybe just an everyday average savings or checkings account, and DeFi offers a much better solution. With that being said, let's dive into today's video breakdown. So I want to start here via a panel discussion in a post that I shared with you guys just the other day with this gentleman on stage whom used to work at Circle, now owns his own organization and company in the DeFi and crypto ecosystem. His name is Ragul, and hopefully I'm not butchering his name. He has former experience at major financial institutions and family offices, and he was the VP for Asia Pacific and the CEO of Circle in Singapore. Take a second and listen to what he says about how in the future, most people won't even know, especially babies and toddlers and people of the younger generation now won't even really know what it's like to have a traditional bank account. And this is going to set the tone for today's video breakdown as we get into this mindset of understanding that we are entering into an ever-evolving era of money movement where earning yield on your capital, your idle cash, your digital assets, 365, 24/7 is going to become the norm.
But there is a new, better world where you've got this pristine on-chain bank, which doesn't depend on your passport, doesn't depend on your residency, and it will appear in the next 10 years, where you can do all the things you can do with a bank, which include having a cash account, a savings account, the equivalent of a card, which will be done as an on-chain payment with maybe something like a card, but it'll be done on-chain instead of via Visa or MasterCard. And then all the other things like stocks are going to be on-chain, crypto's already on-chain, there'll be lending on-chain, everything, right? And so I would dare say that most people, kids that are 2 to 3 years old now, will come straight into an on-chain bank world, which is probably very hard to imagine for us. But I can almost guarantee that half of them will and won't have, and they'll be paid natively in stablecoins, and they'll never really care about what the old world looked like.
And so that is going to go hand in hand with today's video breakdown, understanding that we are undergoing a massive transformative shift, not only in our financial system, but the way in which everyday average individuals, you and I, earn passive rewards on our idle capital or our digital assets, right? Imagine getting a paycheck instantly. Every single time you go to work, at the end of the day, you get delivered a paycheck, or your job is able to pay you every single second, every single hour, every single day of the week. That is the era in which we're transitioning into, believe it or not. And with that payment that you receive every single hour, every single day, you are going to be able to put that into some type of DeFi protocol, or maybe even just have an in-house application on your mobile device through your banking app where you can generate yield. And this is all going to be through the utilization of distributed ledger tech, blockchain, and DeFi. I cannot stress enough that now's the time to start to do research on this. Take a mentorship program, do research by watching these panel discussions, reading thoroughly through these documents that we display here at CYPRX to educate yourself in the now, because we are inherently early. This is going to take time to develop, but it is for a fact developing. Tom Weller, Chief Product Officer at the Stellar Development Foundation, sitting on stage with David Schwartz, said it best. Take a second and listen.
I don't think that's going to stay for long. And, people are realizing, I made this equivalent for like a checking account earlier. If you're just holding dollars and not getting yield on them, you're effectively losing money, right? So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stablecoins are the way to do that, and there's going to be a lot of competition with that space.
If you are not earning yield on your idle cash, you are basically losing money. You have now been told, you have now been warned, why on earth would you not want to take an advantageous approach to start to learn about how to earn passive rewards with your idle stable coins, i.e. turning your idle cash into stable coins, then going out and generating yield. This is hands down the biggest opportunity, in my personal opinion, to start to grow, expand, keep, and maintain your wealth in the now, right? And that is through the utilization of DeFi, earning passive rewards. There's so many different strategies out there that you can partake in. Let's continue down the rabbit hole. We're going to be listening to Michael Sonnenschein, who is now the COO at Securitize, used to work at Grayscale. Take a second and listen to what he says here about how institutions are earning and generating daily yield, which is exactly what I'm trying to show you all as retail participants we can do right now in this very moment. And then he goes on to talk about how more interest in DeFi is emerging in TradFi with digital wallets. Keep in mind what the gentleman from Circle, or the ex-representative from Circle, said just a second ago, how in the future we're going to operate in this era where most people don't even know what traditional bank accounts look like, right? It's all going to be digitally native, digital wallets, crypto, stable coins, real world assets that are tokenized, okay, so on and so forth. Take a second and listen to what Michael here says.
We have to give investors the ability to perhaps earn greater yields or offer them features or attributes that their traditional counterparts aren't getting. So for example, in BIDL, our BlackRock money market fund, investors are getting daily dividend payouts versus in traditional products, they're getting them monthly or even quarterly.
And maybe a follow-up there. So who is the buyer? Who's the buyer of these tokenized assets right now? And over the next year, how do you think that will change, or the next 2 years?
Yeah, I would say candidly, some of the largest investors in these products today are not surprisingly crypto native. They already have value on chain, and it's for them diversifying from digital assets into RWAs sitting on chain as well. There are starting to be more and more TradFi buyers. I think the likes of having asset issuers like BlackRock and Apollo offering products on chain is waking up a lot of people, drawing a lot of attention. But ultimately, it has to do with a shift, right? Today, I think most investors think about a wallet as a place primarily that they're speculating on digital assets, Bitcoin, Ethereum, et cetera. Maybe they're getting more sophisticated and moving into DeFi and other things like that. But that shift is underway where you can actually start to think about your wallet also as a home for investments. And so other assets, whether they're private funds like we're offering today, or even equities, et cetera, you're going to start to see more assets beyond digitally native assets creep into wallets, so that investors are starting to merge what today is a brokerage account with a digital wallet. And so over time, I think you're going to see increased participation from a broader and broader group.
Right. Increased participation, but from a broader and broader group. People are starting to wake up. They're starting to look at their digital wallets in not just some speculative fashion, and instead as a long-term investment schematic that earns and generates passive rewards over a prolonged period of time. He mentioned that institutions are right now in the very moment earning daily reward, daily yield. And guess what, people? Right now, we can do the same as retail investors. Here is another reputable individual. We have Zach from World Liberty Finance. Take a second and listen to him talk about how DeFi does everything better than traditional financial rails. And what you can earn in a bank account compared to what you can earn in DeFi is absolutely embarrassing. And this just goes hand in hand with what I've showed you all up until this point, that people are going to start to have an aha moment, wake up and realize that this is the new transformative wave, and the potential here to earn consistently daily every single day on your income is 110% going to become the new normal. Take a second and listen to what Zach says.
So, everybody right now, whether, you're in this room or outside of this room and know nothing about crypto, everyone's got a bank account. Everyone's got a debit card, right? Most of us have some sort of job that pays us. And the whole use and reason for having a bank account is so that you can get your money in it and you can go spend money. And if you have a savings account or a brokerage account, it's to grow that money and make it more useful, right? So our whole feeling is that DeFi can do all of these things better, whether it's self-custody of your assets, whether it's getting a better yield on your actual deposits by powering it through DeFi, or even spending it more freely. So our goal here for the retail side, and when I would speak about bringing in the next $100 million or 100 million users and the next trillions of dollars worth of liquidity into the space, it's not going to be by, making people understand how to become a crypto native, making people remember a 24-word seed phrase that they, bury in their backyard and give half to their mom and half to their Aunt Sally, right? Like, that's just not usable. So our whole goal here is to build a very familiar style Web 2 application that anybody, my mom, your mom, anybody could go on and use instantly. It feels familiar to them, like a Venmo, like a Robinhood, and allows them to earn, spend, and save all of their assets, whether it's their paycheck or whether it's their savings account or their brokerage account, in one easy to use place. And making it very simple, abstract away a lot of the crypto difficult stuff that's kept people outside the industry, and give people a better return powered on DeFi rails. I mean, if you compare 4% or 4.5% or 5% to what you're getting from your regular savings or checking account, I mean, it makes it look like a joke. You know, like it's almost insulting when you log into your bank account and you see how much they deposit every quarter or whatever it is, quarter or every 3 months, whatever. I guess it's every quarter. When you see what they're actually giving you for letting them lend out your money tenfold, it's kind of insulting, you know? So I think DeFi can give people a much better experience simply by passing that yield back to the user.
You have to understand that DeFi is all about putting the power of the banks back in the hands of the people. And it is happening at a very rapid transformative pace as we speak. And if you ignore this type of education, learning about this transformative process, you risk falling behind others who actually adopt this transformative new technology, right? Put yourself up against somebody. Let's say, again, you have the same amount of starting capital, $100,000 each. You have that saved in a traditional bank account, a high-end, high-yield savings account, whereas somebody else has this money working for them in a stablecoin liquidity pool via two regulated stablecoins like USDC and EURC, and they're earning 10 to 17%. Okay. They're going to outpace you tenfold. And it is because they took the initiative, they learned about DeFi. And I was just using that as one example. I'm just simply trying to get you guys to visualize and see the potential that we now have, even if you're not a crypto native, even if you're not an individual that's like gung-ho about utility digital assets and accumulating a whole bunch of crypto, you're going to be able to earn passive rewards on your cash. And that is monumental. Okay, it is monumental that we are going to be able to do that in the near future. Now I want to go back to Michael Sonnenschein. This was uploaded just 1 day ago, has 68 views. This is from Tokenize This 2025. Listen to what Michael Sonnenschein says about how the banking industry is pretty much screwed and that tokenization is much better.
Yeah. So one, I think asset issuers are coming to Securitize because we're vertically and horizontally integrated, and it's a one-stop shop for them to, make this foray into, tokenized securities. The reasons why asset issuers are wanting to tokenize really runs the gamut. So to your point, it could be democratization of access, right? So for example, we recently brought on chain Apollo's diversified credit fund. Private credit has been a huge area of growth on Wall Street, but by and large, unless you have those types of relationships or your private banker can give you access to that fund, it's not the easiest thing to kind of get access to. And so by bringing that asset on chain, selling it through Securitize's broker-dealer, it opens the audience up to a lot more investors. For other folks, we are, looking at tokenization across, I guess, almost through a different lens, right? So let's look at the product we have at BlackRock, BIDL. It's a tokenized treasury fund. There, we're actually really using tokenization to really almost outshine the traditional counterpart. So let's stack them up against each other, where in BIDL, you are holding tokenized treasuries, earning the same yield as you are if you're just holding treasuries directly or invested in some money market fund. But BIDL has 24/7 liquidity. It doesn't care about bank holidays. It doesn't care about order cutoff times, where typically in a traditional fund, you have to submit an order by 2 p.m. or you have to wait till the next day. And of course, it's not open for investment or redemption. Every day there's bank holidays, fixed income markets may be closed, et cetera. In BIDL, we're actually paying users and investors, I should say, dividends on a daily basis. And again, in a traditional fund or traditionally holding treasuries, you're getting your dividend payouts monthly or maybe even sometimes quarterly. So I think it's this burden, I almost think of it as, that we hold as a company, where we're not trying to bring products to market, through the lens of let's tokenize just to tokenize. We are actually holding ourselves to a higher standard to ensure that objectively, when we bring things to market and bring them on chain, we are ensuring that objectively there are features or attributes of the products that outshine their traditional counterparts. We're giving investors quicker or more frequent access to their capital, or maybe it's even the opportunity for enhanced returns.
Maybe it's even the opportunity for enhanced returns, right? Again, generating daily rewards that you can take, you can spend, you can compound, you can do so many things with. Generating returns on a daily basis is insane. And in DeFi, you can do that every single second. You're generating rewards, passive income every single second, which you can take, you can compound, you can go out there, you can participate with those rewards in the DeFi ecosystem and other DeFi strategies. There are so many things you can do. This is the last video clip that I want to play, and it's just Michael Sonnenschein on stage confirming that he believes from Securitize's perspective that we're going to see much more capital flood into the DeFi ecosystem, which is yet again another reason why you should aim to start to educate yourself now so you can beat the rest of the retail crowd that has yet to have an aha moment, but is likely to in the very near future.
You guys announced with Athena the new Converge platform to connect institutions to DeFi, right? And actually just today, you announced you're going to be building on Arbitrum. Very cool.
Yep.
Tell us more about the mission here. What's the initiative here? What's the outcome, the goal?
Yeah, so one of the things that we also believe from a utility perspective that we're trying to unlock at Securitize is bringing RWAs into the world of DeFi. You know, again, going back to the Apollo credit product, for example, if I just own that directly through my private banker, et cetera, I'm certainly not going to be able to use my investment in Apollo as collateral to go trade in DeFi or, you know, enter into some kind of looping strategy or something like that in DeFi. But we believe that there's a tremendous amount of capital that wants to move into DeFi.
That is a huge statement. To end it there, we believe that we are going to see a massive inflow of capital into DeFi. And over the next consecutive couple of years, I have a firm belief that that is going to be the case as more people have an aha moment. Now is the time to start to educate yourself, to not lack financial literacy in the crypto and DeFi ecosystem, to understand how to get your digital assets working for you. As always, bringing you all some of the realest information in the game. If anybody's interested in learning how we are earning passive rewards on our idle digital assets, then head over to CYPRXtrading.com. We'd love to have you tap into the Wealth 28 Club. And with that being said, I'll see you all in the next video breakdown.